This is FinTech Futures at FinovateSpring, and I'm joined by Anu Somani of US Bank. How are you?
Wonderful, Paul. How are you doing?
Excellent, very well, thank you. Very well. How are you enjoying the conference so far?
It has been wonderful. There's clearly a lot of excitement going on. The conferences continue to get bigger and bigger post-pandemic, so it's really nice to see everybody back. And I think the in-person still holds a fascination for me, so it's very, very nice.
Excellent, great. So just to get started then, we'd like to give a quick introduction then to yourself and your role then at US Bank.
Absolutely. So I'm a part of what we call the Global Treasury Management business line at US Bank. I head up global payables and embedded payments. And what that essentially means is our clients, which could be small, medium, large businesses, how they pay their business partners, their vendors, their employees, their customers. How do they do that safely and securely? How do they do that in the most cost-efficient, process-optimized way? And how do they do it in a way that is aligned to their business goals? That's what I spend my time thinking about.
Excellent. And you're going to be taking a part in a discussion today on how the pandemic has impacted payments. So just to get started then, how do you think payments have evolved particularly over these last few years then? And what are some of the key changes that we've been doing?
Yeah, absolutely. I mean, pandemic, I would say, has been the great catalyst in our industry, right? So after the initial frenzy of just getting used to, whatever the pandemic brought along with it, a lot of organizations started holistically looking at their payment processes. And that was needed because checks existed. They were not ideal, but they were acceptable. They still did the job. But when the pandemic hit, there was nobody in the office to sign the check. There was nobody in the office to clear the check. So it was almost at an accelerated pace that our clients started to look at their manual paper-intensive processes, whether they were payments, like I said, whether they were to their employees, their business partners, their vendors. They started evaluating what it would mean to digitize those payments. And it is easier said than done, because think of it, I'll give you one small example. When you have to send out a check, all you need is a name and an address. Think about wanting to change it into a digital payment. You need to be able to collect all of the information that's required to make a payment, whether it is the routing number and the bank account details, whether it's a debit card number. You need to be able to collect that, but not only collect that, but also store that securely so that you're not in the news for a big breach that happened at your end. So it is a transformation at many levels, and a lot of our clients started to think about it. A lot of our clients started to think about security and fraud as they evolved from this paper world. And we are engaged with a whole bunch of clients who are thinking about completely getting rid of paper. They have lofty goals of wanting to digitize completely, and time frames vary. But to me, I feel like this was already in the works, but the pandemic really sort of accelerated and became the catalyst in what I'm hoping will be the big demise of paper.
Excellent. I mean, on that front, US has historically been a bit slower in terms of adopting digital payments with, as you've mentioned, their checks and cash still kind of relatively common ways to pay. Why do you think that is, and do you think that shift is happening now?
Yeah. Absolutely, right. So I come from India, right? So I always love to give this example that when India was one of the fastest countries which adopted mobile phones. Why was that? Because there was really no landline that existed. So when the mobile technology came, pretty much every single person had their mobile phones in a matter of a very, very short time. So think about that, extrapolate that here. Before the whole payment explosion, payment innovation happened that we've seen in the last few years, payments were still happening, right? So checks were existed. We had ACH, so they were not ideal. They didn't really solve for every single pain point, but payments were still happening. So the need and the burning, urgent desire to undertake what I just described, a holistic digital transformation, the driving force never existed. However, I feel like that's changing. We've seen newer and newer networks, whether it is bank-owned networks like TCH, RTP, Zelle, Visa and MasterCard owned networks, or even fintech networks. We've started the emergence of the networks. We've started seeing adoption. We've seen several drivers, whether it's the need for speed, whether it is the need to control how I receive my payments. We've seen a lot of drivers, and then we've seen some market leading use cases. So absolutely, I think it is almost like the avalanche effect that we will now see. We've got the infrastructure in place. Now it's a matter of how, sort of we see the emergence of newer and newer use cases. So yeah, we will absolutely, we will see sort of now an accelerated movement towards digital payments.
Excellent, excellent. And what are some of the payments trends that you're noticing then from your customers at the moment? How important is personalization?
Absolutely. I think personalization, and I would say the biggest trend in my head is really meeting the clients where they are. What do I mean by this? So essentially think about, a B2B payment. Think about an accounts payable clerk and their day-to-day. Usually, let's just say they work in a treasury management system or a procure to pay. They would spend their entire day approving payments, looking at payments, doing their business, and then they would have to take that payment, go on to a banking portal and retype there. Or they would create that into a file, upload it somewhere, or send through, SFTP. That is changing. Clients want to see payments being kicked off from exactly where we are. So whether it's a procure to pay system. So we do see a lot of times where banks like us are working with all of the applications that we see our clients using day to day, so we can pull payments and we don't create a disjointed process. Now that's the B2B world. In the B2C world, just think about how you do payments, right? So I may want, to receive. My landlord wants to pay me the return of my rental deposit. I may want that in my bank account. However, I may want my friend who I'm sharing lunch with, I want to receive that payment in Venmo. So there is a lot of choice that exists, and that sort of is governing the payment options that our clients need to provide to the consumers, and they make the choices accordingly. So absolutely, I think meeting where the clients are, whether they are payers or payees, whether they are bank clients or our clients, that is, I would say, the emerging trend that I start to see. And within that, as we built all of these rails like RTP, those are just enablers then.
Excellent. And in the US, you've obviously got FedNow just around the corner. How much of an impact do you think that's going to have? And is there a lot of positivity across the country for that?
Absolutely, right? I mean, we have seen forever and a day, Fed enterprise working hand in hand with private enterprise. So FedWire has existed for a very long time. ACH has existed from both a Fed perspective as well as a private enterprise perspective. So certainly, I think FedNow brings a lot of excitement, whether it comes to banks like us or even clients. For us, it is what FedNow will do to accelerate the adoption, how more and more banks will participate now to create a universal reach. The one thing that is different in US as compared to some of the other geographies is it is faster payments and real-time payments, and these instant payment rails are not mandatory. So banks tend to have their own choice of which rail they want to connect to. So for us, FedNow is a wonderful, sort of amalgamation of the learnings we've had so far with the rails that have come so far. It can take the, sort of what we have essentially gleaned, best practices that we have, and it will bring together the network. So really, I think to us, it's a matter of how all of these networks come together in a wonderfully cohesive way to create a seamless experience from our client's perspective and from a recipient's perspective. Because, at the end of the day, do I really care if my insurance company wants to pay me a claim? Do I really care whether it gets paid, by a FedNow rail, by a TCH rail? No, not really. For me, it's a matter of I bank with, bank A and B, and I want to make sure that if I want to receive my funds in a bank, they get cleared instantly, 24/7 in a way I want. So that is the part. So for me, I think FedNow completes the story that has been building over the last few years.
Excellent. And are there any other kind of payments tech developments that you're seeing in the space at the moment that you think that you're really excited by and you think other banks should be looking to tap into as well?
Absolutely. I would say I think the payment trends are perhaps not payment at all, right? And when I say that, I'm specifically thinking about embedded payments. Think about, for example, your taxi journey process, right? Just a couple of years back, before the advent of Uber and Lyft, we used to take a taxi, and especially for somebody like me, I do not carry cash ever, right? So taking a taxi in New York City used to be an immense source of stress for me, because I'd be wondering, is the taxi driver going to accept my card? Yes, no. Or when I get down, will I have to start thinking about drop me close to an ATM so I can go pull, or drop me close to my office so I can go to my office and get a couple of dollar bills, right? It used to constantly be a part of my ride. Fast forward a couple of years in Uber, you set up your payment, the only thing you then care about is your ride. You do not think about how the payment happens. It happens seamlessly. In fact, a couple of hours later, they will even send you an email on whether you want to tip the driver, how much you want to tip. So payment has become in the background, even though that is what enables the whole ride. So that trend of embedding a payment in experiences, that is really, really big. I think it is starting to come pretty much everywhere, whether it's rides, whether it's how you get paid. So gig economy players, how you buy and sell cars, how you trade, sort of on your market account. All of these use cases are being enabled by what we call embedded payments, where payments exist, but they are not front and center. So that's a big trend I see, sort of what will govern and what will lead to the birth of many, many use cases in the future.
Excellent. And just to quickly finish off then, with the rising popularity of digital payments, do you think there's a place for a cashless society kind of in the near to long-term future, or is there still a place?
Absolutely. I am rooting for it completely. I mean, I stopped carrying cash a couple of years back. No, I will tell you, one of the reasons why I am in payments is because I have seen it work. I've lived and worked in South Korea, where it is, to a very, very large extent, even a decade back, everything was cashless, everything from, buying to taking a train. So we are getting there. I think, the pandemic and accelerators like some of the experiences that we get outside of the banking world are certainly leading, but it will be ultimately, I think it is a step-by-step process. The underlying infrastructure needs to change so that, sort of cash starts to lose its significance. Then once the infrastructure gets built, you start seeing some use cases that drive these newer and emerging payment rails, and that start, sort of making people realize that all the benefits of paper that have existed in the past no longer are valid. And then, it's ultimately the demand of consumers. So I think the first two, we've certainly started to see a lot of infrastructure update has happened, both from a market infrastructure update as well as the banks. We've started to see some leading use cases, whether it's through, sort of banks like us, whether it's fintech driven. We've started to see market leading use cases. So absolutely, will it happen in the next 2 years? Perhaps not, but certainly in our lifetimes.
Excellent. I'm looking forward to it. Anu, thank you so much for taking the time out to talk to me. It's been a pleasure.
Thank you. Same here, Paul.